Ofir Levy. Ofir.
Hello, ladies and gentlemen. Thank you very much for being with us today and giving me a chance to present the Phoenix real estate market. I'm going to take it a little bit different than I usually do with my presentation. So I'm going to try to reduce the fluff and actually give you some statistical and analytical information about the market, which hopefully you haven't seen before. Maricopa County, which is where Phoenix is located, both the east and the west, is the fourth most populated county in the entire US. We had a massive population increase of 25% between the year 2000 and 2010, which was 2.5 times the national average. And even since the real estate market started to turn down in 2006, we've seen an increase in our population by an additional 8%. We've got very low cost of living. We've got a very diversified employer base. These are going to be some of the high-tech companies. I usually get a couple chuckles when I call it the Silicon Desert, but David actually, luckily, who's out there, thank you for this upcoming map, presented me this, which is an actual map of the Silicon Desert. It will show you that we've got very much a diversified workforce, and we are very heavily invested in high tech. Intel alone has pledged over $7 billion to build new facilities and revamp current facilities in the Phoenix market. Some of the other employers we have in the Phoenix area, US Airways has a hub there as well. Arizona State University is the largest university in the entire US. American Express, JP Morgan Chase, Wells Fargo, these aren't just companies that have, let's say, branches. They actually have call centers there, data centers. If you've got an American Express card, take a look at the back. You'll see an 800 number as well as a 623 number. So you're going to get, the 623 number is an area code in Phoenix. And they have large call centers there, and regardless of where you're carrying American Express, generally when you call them, you're speaking to somebody in Phoenix as well. So this chart right here just kind of shows the unemployment rate, and it kind of compared to some of the other markets you may be considering. We're currently around 9% unemployment. That's not great by any stretch of the imagination, but that's where the country is these days. But it is still pretty competitive, especially when you compare it to other markets that offer such great investment opportunities as the Phoenix market does. As I say, the smart money is buying now. As I've mentioned, we do have an increasing population. Obviously, that's going to be something that's needed to absorb and to retain and increase the demand for properties. There's no discussions in Phoenix about bulldozing any homes. That's just not the case. Supply of homes for sale, as well as supply of homes for rent, which I'll cover in detail later on, is very low. So it's simply a matter of musical chairs at times with houses, where people are switching from previously being owners to becoming renters. However, the demand for the homes, both from the new buyers as well as the new renters, is there very much so. So we have the increasing population plus a lack of qualifying borrowers and credit. It is obviously more difficult to get loans these days. And a lot of people may not have the appetite because they have gone through a foreclosure. And there's a lot that actually do have the appetite and see, well, God, the house that I bought, that I loved and lived in for many years is now half the price. I would love to buy it now. I just can't get a loan. What am I going to do? I'm going to go rent and I'm going to save my money. So you've got the increasing population and a lack of credit. And that's basically where we get the strong rental demand, which is ideal for investors like us who seek to purchase properties and rent them out rather quickly. And this demand is going to be here for years to come. For example, Fannie Mae, I believe, is at 5 years now. If you've gone through a foreclosure, typically they won't lend you for 5 years. Sometimes they cut it down to 3, but regardless, there's a pretty big gap there in time where people have to rent. This chart shows the anticipated growth in population. As you can see, Arizona is only second to Nevada and only slightly behind with regards to anticipated growth by the year 2030. Now let's take a look at some of the raw data that most investors typically like to look at. So average sales bouncing off the bottom. I used this same chart when I was here presenting last in September, but I've updated it. And as you can see, been in this range for the last 2.5 years. I look at the Phoenix market as a coiled snake. And I feel as soon as we start getting some more good news on the national level, because that's the way so many people take their news for real estate, is on national levels, not local, which isn't wise, but a different subject altogether. The Phoenix market is definitely poised to make a very serious comeback. This right here, long-term values, averages on dollar per square foot. I'm not going to cover the numbers. I look at this chart, I see potential. We're well below where we were in 2001, and we're well below replacement cost, and we're seeing things level out. So in this situation, you might say, well, I don't see an exact bottom, Ofir. First of all, you don't see a bottom until you've passed it. And secondly, where you may lose a little bit with regards to value, if it continued to decline slightly, you'll probably make that up in cost of financing. We do expect rates to go up. They haven't been this low. They're at historic lows. When they do, and you look at your cost to finance the property, sure, maybe you bought it $10,000 less, but over a 30-year period, you might pay $20,000, $30,000, $40,000 more to finance that same property. So realistically, you'd be getting a better deal on that. And this is a very important chart. Where do foreclosures start? To me, this is the #1 best leading indicator for any market. And of course, I'm showing it because Arizona is #1 out of all 50 states. We've had a decline of 26.4% of delinquent loans. So all distressed property starts here. Whether it goes to a loan modification, whether it goes to a short sale, or whether it goes to a foreclosure. This is where the problems start. This is effectively when someone stops paying the bank. But of course, as an investor, you want to see this number declining. If it's increasing, it takes away a lot of motivation, at least it would for me. We were previously discussing the delinquencies, and sometimes those end up in short sales, sometimes those end up in loan modifications. This is actually pending foreclosures. These are foreclosures that are scheduled to be auctioned off. So in 1 year time alone, we've seen the amount of pending foreclosures drop in half, down 50%. That's pretty amazing, I think. One other good thing about the Phoenix real estate market is that we foreclose on properties very quickly. On average, we're 165 days. What does this matter? Two things. Not only does it reduce shadow inventory or the pipeline, but it also reduces the incentive for a homeowner to default on their loan and stay in the property. So generally when I do show that slide, the next question I get is, aha, but sure, what about the shadow inventory? And so this teal looking kind of area there is the unlisted REOs. As you can see from the chart, this has been declining substantially this year as well. And as you can see now, the pipeline itself is below 10,000 units. So if every single one of these unlisted REOs were put on the market tomorrow, we would still have a seller's market in the Phoenix area. Not a buyer's market, a seller's market. There's two different types of ways to foreclose in the US. You have the judicial foreclosure states as well as the non-judicial foreclosure. Arizona is a non-judicial foreclosure state. What that means is we do not utilize the court systems at all to foreclose on properties. It's a pretty cut and dry, black and white policy. The trustee holds an auction and the property goes away. In judicial foreclosure states, the court's involved. That increases the length of time. So this is foreclosure percentages, and it divides judicial versus non-judicial foreclosure states, and the middle line obviously being the national average. So as you can see, in judicial foreclosure states, foreclosure filings are actually at all-time highs right now. That is not the case in non-judicial foreclosure states. Another quick little glimpse here showing you that our market is getting healthier, another leading indicator. not only is the market share for foreclosure properties down 40% in the past 6 months, but so is the short sale side of the market. What is gaining traction, what's taking more market share, are your regular equity / non-distressed market share listings. This means that more people are selling in the old-fashioned way. You know, you get these agents that put these listings up that say, not bank-owned, not short sales. Well, whoop-dee-doo, so is half of the market. And this chart basically shows you the same thing. If you look at it, it categorizes total supply, but it segments it into what type of listing. So in the last 12 months, not only in REOs or foreclosures, but also in short sales, we've seen a drop in supply every single month. You can see at the beginning, in November of 2010, there were 8,000 REO listings on the market. Now there's just over 2,000. Same thing with the short sales, over 12,000, now we're at 3,000. Sooner than later, we will be offering short sale listings, and this is the reason why. In January of this year, the success rate of short sale listings was only 35%. I didn't want to waste my client's time, nor my own time, working with something that's got a 1 in 3 chance of succeeding. That rate of success for short sale listings is now almost up to 70%, which makes those viable. So we've covered the for purchase side, basically for sale, purchasing side, and we've seen that it, at least in my opinion, the stats show that it's a great time to get involved. However, all of this is pie in the sky. We talk about cash flow, we talk about ROI, but unless we can get the property rented for you, it really doesn't mean much of anything. So let's take a look at how the rental market is doing in Arizona. Right here, you're going to see average lease prices per square foot from 2004 to 2011. All I want you to take away from this chart is the fact that over the last 3 years, the average lease rates has been increasing. We see also active for rent listings here. As you can see, this has actually gone down. Now it does vary because it's cyclical, but realistically, this number should be much higher because the amount of rental units out there is greater, and the demand is also greater as well. Another thing that's very important, how long is it going to take you to rent the property? Same kind of deal here, tracking over the last 3 years. You see a steady decline in the average amount of time it takes to rent a home. We're down to just 46 days. And my management company actually averages 27 days. So again, another great sign, another good reason to become a landlord in the Phoenix market. So with that being said, it basically wraps up my presentation. I'm just going to tell you a little bit about my companies. I kind of moved this segment to the back instead of the front. Westwood Realty and Investment, the company that I'm a broker for, we handle buying and selling of residential investment properties. We've been doing that for about 16 years. My partner out there, Aaron Richardson, is the designated broker for our management company. We currently manage over $20 million of real estate assets. We manage everything from condos, single-family homes, multifamily, triplexes, fourplexes, office, and retail. We're even managing real estate now for national banks. They've actually decided to stop selling and start renting because they like the yield. And just to top it all off, we also have, a maintenance company with staff on hand. So truly we offer the full turnkey solution from purchasing to managing to repairing things. That I haven't included any listings in my presentations this time. I feel that true investors buy when market conditions dictate an opportunity is present or forming. I hope that my chart have shown you that there's very much an opportunity forming in the Phoenix real estate market. And that's why I really believe that now is a great time to buy, and Phoenix is the best market to buy in the US, in my opinion. Obviously, I'm biased. Take a look at the numbers I've shown you. Ask the other markets how they stack up. Feel free to stop by our booth. I'll show you how all the other markets stack up against it. Thank you very much for giving me the opportunity to speak today, and I look forward to speaking with you outside at our booth.
All right, thank you very much.
Thank you.